What a year 2024 has been for investors. But can the stock market go up for a third year in 2025? I think so, and in this video I'm going to give you my reasons why, and in addition I'm going to give you the top 5 stocks that I think will be the biggest winners next year. By the way, I own all of the stocks mentioned and this is not financial advice. Looking forward to 2025, I think it's going to be largely an extension of what we have seen in 2024 with the continued traction of the AI boom, growing GDP, continued rate cuts, moderating inflation, and a business-friendly presidential administration. However, the stock market has gone up so much already over the past 2 years, so isn't it due for a correction? Well, that may be the case, but if we look at recent history, it shows us that the stock market has gone up 3 years in a row many times before, so it might be normal to see another positive year going forward. In the late 80s, the Dow Jones went up 5 years in a row, most of them by double-digit percentages. Then throughout the 90s, the stock market went up a whopping 9 years in a row before topping out in 2000. Just after the GFC, the stock market went up 6 years in a row, and even during COVID, the market managed to go up 3 years in a row. So again, if we do get a positive year in 2025, it won't be some sort of statistical anomaly. In fact, I think it'll be entirely normal, mainly due to the reasons I outlined previously. So with that said, let's move on to the first stock, which is Palantir. Palantir is the leading pure play AI stock, and both its fundamentals and technicals are looking exemplary. It's managed to grow its revenue quarter after quarter at double-digit percentage rates for a while now, and it doesn't look like it's slowing down anytime soon. The company also reached GAAP profitability this year, reaching $144 million in net income last quarter. Palantir makes its revenue through 2 main branches, government and commercial. Whilst the government side of the business was its primary revenue driver a few years ago, it has recently started turbocharging the commercial side of the business, whose revenue grew a whopping 55% year over year in the US. Recently, Palantir extended its partnership with the US Army through a $620 million Vantage program contract, which is a key component of the Army data platform. Furthermore, it has recently announced a partnership with rising defense technology firm Anduril, where they will be combining their technologies to deliver even more operational capability to government entities. When it comes to the chart, it is trending very strongly. Perhaps some might say it is due for a correction, and I wouldn't disagree. However, there is a lot of volume support, and as long as the price doesn't violate these key moving averages, I'll stay bullish. If Palantir continues to deliver great results, I don't see why the stock cannot crack the $100 mark early next year. Moving on to the second stock, which is one of my favorites, and that is Reddit. This is one of the best performing IPOs of 2024, and when you look at the revenue growth it is experiencing, it's not surprising. In fact, its revenue growth is accelerating, as you can see here. Its gross margins are also quite high, even for a social media business, and it also reached GAAP profitability in the last quarter with net income of just under $30 million. Daily active users continue to go up significantly and should soon reach 100 million per day. Now, Reddit earns revenue through 2 ways, advertising and data licensing. Advertising is pretty straightforward, but data licensing is a new one. With the advent of large language models like ChatGPT, authentic sources of written language are becoming increasingly valuable. Reddit now earns revenue by giving companies like OpenAI access to its users' posts, meaning that AI companies can now use language data to train their LLMs. And it's not just AI companies seeing interest in Reddit. In the current digital age, with real-world interactions reducing by the day as more and more people socialize online, authentic connections with other human beings are becoming increasingly scarce. Reddit offers a community where strangers from across the globe can connect through common topics. And I think Reddit offers something that a lot of other social media platforms don't, a sense of community where anyone can partake as opposed to walled off friend groups. When we look at the chart, the price has more than doubled since the election, and it looks like it's about to make a new all-time high. The volume has been supportive for several months now, and I expect the price momentum to continue. This stock could well be trading in the $200 level if results continue to surprise to the upside next year. Let's move on to the next stock, which is Tesla. Now, this electric vehicle giant stock has been struggling for a few years, but the election result breathed some new life into it, and the price has been supported by some solid recent quarterly results. Even though its revenue isn't growing as much in percentage terms as it used to, just the sheer size of the company and its ability to convert that revenue into profit makes the stock a worthy investment. In the last quarter, even though revenue grew by only 8% year over year, Tesla still managed to boost its GAAP net income 17% year over year, which indicates that there is strong operational leverage. An overlooked side of Tesla is its energy business, which is seeing impressive growth of 100% year over year to $3 billion in revenue in the last quarter. Tesla is also progressing well on the autonomous driving front, with FSD now in version 13 and receiving good reviews. Looking forward to 2025, we can expect even more affordable models from Tesla, which should see it winning even more market share. Now, Tesla's chart doesn't look as glamorous as the others, but if I just look at the past 2 years as a consolidation, we could be in the beginning stages of a huge breakout. The stock has broken out of multiple long-term trading ranges and has recently set a new all-time high. After watching the stock for 2 months, I finally bit the bullet and bought the stock on Monday. Tesla has had its fair share of doubters over the years, but the company always seems to come back to surprise nearly everyone. And if you look at the EV sector as a whole, it's not going away anytime soon. And whether you like electric vehicles or not, companies like Tesla are here to stay, and in 10, 20, 30 years time, who knows what the valuation of Tesla will be. Moving on to the next stock, which is Robinhood. After crashing in the last bear market, the stock has been steadily recovering, going up alongside the broader market. Now, it's not surprising to see a stockbroker like Robinhood doing well in a bull market, but this company is different to traditional brokers. The biggest factor driving Hood's valuation is its rapidly growing revenue. For the last 3 quarters, it's been growing its revenue at nearly 40% on average. At the same time, it's also maintained cost discipline by decreasing operating expenses by 10% year over year in the last quarter. Its assets under custody continue to grow exponentially, now sitting at over $150 billion. And it's not just for Gen Z and millennials, its push into retirement accounts and high interest paid on cash deposits appeals to older generations like the baby boomers. Furthermore, Robinhood offers crypto, which is all the rage currently, and it even has a credit card called Robinhood Gold Card, which offers features like cashback rewards, no fees, and other bonuses. So Robinhood is no longer the tacky, deep discount stockbroker it used to be. It has actually grown into a profitable and reputable financial institution. As for the chart, the stock has been trending high for many months now on the back of significant buyer support, as indicated by these tall green volume bars. Last week it bounced off the 10-week EMA here, which is quite bullish price action, so I see further upside for this stock through the new year and beyond. And the last stock on my list, but certainly not the least, is Affirm. Affirm is a payments company that specializes in part payment plans or buy now, pay later, which essentially means you get the product or service today, but you pay it off in installment plans with no interest. I do believe they offer loans with interest, but their buy now, pay later interest-free option is their bread and butter. When it comes to revenue, growth is impressive, with last quarter revenue reaching nearly $700 million at a 41% year-over-year growth rate. Now, the company is currently not GAAP profitable, but hopes to be by late next year. Affirm also offers a card called the Affirm card, which is a Visa debit card that allows customers to choose how to pay for things. This means that they can choose to either pay in full upfront or request to pay over time through the Affirm app. This allows for a lot of payment flexibility, which I believe is a key factor behind the company's growth. As for the chart, the stock suffered a sustained dip in the first half of the year, but has since recovered nicely, trending nicely on strong volume support. It's nice to see the price hugging the 10-week EMA as it keeps climbing higher. If the company continues to deliver on earnings, the stock should reach triple digits sometime next year. So those are the top 5 stocks I'm buying for 2025. Now, if you were looking for small caps like SoundHound, Archer Aviation, etc., please check out my previous video where I outlined the top 5 small cap stocks I'm buying right now. This video was mainly focused on large caps, and if you own any of the stocks that I mentioned, please let me know in the comments below. Thanks for watching. Please hit the like and subscribe button for more videos like this, and I wish you all a healthy and prosperous 2025.